I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Good morning, tribe. Before we look at today's signal, let's talk about what's keeping me up at night. Because today is Thursday, and on Thursdays we lead with the downside. We look at the risks first, so we stay protected when the unexpected tries to show up. You know what the big money did while you were sleeping? They kept the futures climbing quietly in pre-market. Asia and Europe digested yesterday's headlines without blowing up any structures. Powell confirmed he'll stay on after the Fed held rates again. No fireworks, no panic, just a steady hand on the wheel while the rest of the world tries to manufacture drama. Remember what we said in yesterday's close? Institutions demonstrated perfect discipline ahead of the Fed decision. They digested recent highs in a tight, respectful range while the financial media screamed crash hysteria. Well, that discipline carried right through the night. Futures are climbing. The VIX is declining. And our entry gates, they all passed. That brings us to the heart of it. Our RSAi, our Rapid Skew AI engine, has delivered a clear place signal for today. All three gates aligned. This is not guesswork. This is the math speaking after scanning skew, momentum, and the exact premium the market is willing to pay right now. And that's why you are here with us. Because while everyone else is chasing headlines, we follow process. Step back for a moment and look at what actually happened overnight. The preliminary GDP print from yesterday, that negative 2% figure that came in better than the prior contraction, still has everyone whispering about fragility. Oil spiked hard on Middle East supply fears. The dollar found some footing. Gold gave background. Crypto took another leg lower, yet the S&P futures refused to break structure. You see the pattern? Cross currents everywhere. Retail eyes bouncing from one shiny object to the next. But the institutions, they stayed disciplined. They layered measured protection. They let the VIX bleed lower. Negative correlation held textbook style once again. This is the same setup we watched play out beautifully over the last several sessions. As we discussed in yesterday's recap, when RSAi signals place and term structure remains in healthy contango, trust the process. Let time decay and probability do the heavy lifting. Which brings me to the big media versus reality segment. Here's what the talking heads are pushing this morning. They're still trying to sell you the idea that macro investing is passé after the FOMC statement. They're framing Powell's confirmation as the end of an era with hawks on the rise. They're turning a contained, telegraphed Fed meeting into some kind of dramatic turning point. But here's what's really happening. The policy risk was already priced. The market had digested the unemployment numbers, the PPI, the Tokyo CPI. Institutions knew the Fed would hold rates. They knew the GDP improvement, while still negative, showed the worst of the slowdown might be behind us. So they sold volatility into the known catalyst. They harvested premium, while retail walked straight into every fear trap. That's the game, folks. The big media gives you bad data, wrapped in panic, then blames you when you lose money reacting to it. That's exactly why we exist. That's why this community matters. We see through the theater. We know the fragility curve is real. The bigger these systems get, the more stress they hide beneath the surface. One unexpected shock, and everything that looks stable can turn fragile fast. That's why our adaptive layered VIX hedge, our ALVH, stays in the background ready to protect us, even on days that look quiet. Now let's talk about the geopolitical landscape, because it matters deeply to how we position our iron condors. Iran tensions remain in a holding pattern. No new shocks. Trade talks with China show export strength, but soft domestic demand. Central banks are moving roughly in tandem. The 10-year yield stayed stable into the Fed decision, giving equities room to breathe. The dollar firmed modestly. Oil's surge on supply concerns did not transmit into equities the way the fear merchants wanted. This is classic contained volatility. Realized moves stay exceptionally low, even as we sit near highs. And that brings us to something Thursday specific I want you to really hear. Let's talk about the VIX term structure curve and what it signals for the next 1 to 2 weeks. Right now, we sit in strong contango. The spread between the spot VIX and the 3-month VXV is healthy and wide. That tells us the market expects volatility to stay contained in the near term, while pricing in a little more uncertainty further out. For us, that contango is pure oxygen for premium sellers. It tilts the odds in our favor. Our iron condors are built exactly for environments like this. Our RSAi verified signals are locked in. The adaptive, layered VIX hedge layers remain positioned to cut drawdowns if something breaks the calm. Because even in strong contango, we stay risk aware. That's the Thursday mindset. We protect first. We celebrate the premium collection second. Here's where it gets interesting. VIX at 17.95. Elevated, but still below 20. Conservative tier is green. Safe to place. Balanced is yellow. Tradable, but size down if you are cautious. Aggressive is yellow. Tradable with extra caution. All three tiers are active today. Our methodology is positioned perfectly for what we're seeing. The EDR entry gate is met. The temporal reading supports forward placement. Everything lines up for another day of disciplined premium collection. This is why we're here, tribe. This is why we built this. You can't talk to your family about what we do. They don't understand the difference between headline noise and structural reality. Your coworkers are probably still glued to CNBC, wondering if today's numbers will finally cause the crash that's been predicted for 3 years. But we know better. We are the insiders. We follow RSAi. We respect contango. We keep our ALVH layers ready. We let math and process separate us from the statistics. Remember last week's setups? We said watch how institutions behave into known catalysts. Well, here we are again. Another Fed meeting in the rear view. Another GDP print absorbed without breaking structure. Another validation that when the gates pass, we place. When the term structure supports it, we stay patient. Discipline compounds. Emotional headline trading destroys. That's the edge we protect together every single day. Now for the forward look. Here's what we're watching closely today. First, the core PCE price index numbers coming later. Those are the inflation readings that could still move the VIX significantly. A hotter than expected print might challenge the calm, but our hedges are built for exactly that. Second, any follow-through in oil after that big overnight surge. Will it stay contained or start transmitting into broader risk assets? Third, the 10-year yield behavior. Any breakout there changes the tone for equities. And finally, the VIX futures term structure itself. Any flattening of that contango curve would be our first warning sign that the regime might be shifting. We will be monitoring all of it in real time. And of course, be sure to listen for any breaking news from Miss Vicky. She'll flash the moment something material develops that changes our risk picture. You know what separates this community from everyone else chasing the next hot take? We don't need to be right about direction. We don't need to predict the exact top or bottom. We simply need to respect the process, protect the capital, and let probability work in our favor day after day. That's how consistent premium collection happens. That's how survivors are made in these markets. Even on a Thursday, when we lead with caution, we stay forward focused. We stay optimistic because we are prepared. The big boys can try to set their traps. The media can manufacture whatever fear sells clicks. But we see the structure. We follow the signals. We protect first. And that's why you tune in every morning. That's why this tribe grows stronger with every session. We are building something real here. something grounded in math, history, and conservative risk management, something that doesn't blow up when the fragility curve finally reveals itself. So as we head into today's session, stay disciplined. Trust the RSAi verified process. Keep your eyes on those watch levels. Protect before you collect. And know that no matter what the day brings, we face it together. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.